What's up, welcome back to another video, guys. In this video I'm going to be just talking to you about how you're going to want to read price action and how you can use different ICT PD arrays to be able to read the price action and ultimately get a very good idea of where price action wants to go. Now, there are two main ways that you can read price action. The first way is by finding a very good and strong draw on liquidity. Now, what I mean by that is there are different types of liquidity. You have your swing highs, swing lows, which is just liquidity like that looks something like this. So as you can see, let me just clean up this price action for you. As you can see, we have this price action right here. This would be a swing high, this would be a swing low, so would this be a swing low? So all I mean by swing highs and lows is just the swing highs and swing lows, and that is where liquidity is sitting. Now up here, this would be called buy side liquidity, and all buy side liquidity means is just up here is where buy stops are resting. So once the market comes up and takes out this area in the market, then lots of people who are going short here would all be getting stopped out. And yeah, so that is why we call liquidity up here. So that is one of the ways. And all liquidity is just buy stops and sell stops where they are resting in the market. Okay, so that is your one type of liquidity, which is just swing highs and swing lows. Then you have your trend line liquidity, also known as a low resistance liquidity run, or high resistance liquidity run. Sorry. So all that is if you have, this isn't the best example, but let's say this is a perfect trend line. Then lots of liquidity is all sitting up here. So up here there is lots of liquidity all in this zone right here, all above this trend line, and the reason for that is for the exact same reason as the swing highs and swing lows. There is lots of buy side liquidity sitting along these trend lines, because retail traders, every time the price comes and taps this zone right here, as you can see right now, this is live price action. Every time price action is coming up and tapping this trend line, all the retail traders are shorting like this. Their take profits down here, their stop loss is above this trend line, something like this. So that is why there is lots of liquidity sitting up here. So that is another reason why this is a good liquidity target. And then the final one, and my favorite, is equal highs and equal lows. So I might not be able to find an example here. Okay, so here we have equal highs. All equal high means is just where price action has came to and tapped that area, if that makes sense. So as you can see here, price action has came up to the same point twice. So all an equal high is once the price action comes to the same point more than once without going above it or below it. So as you can see right here, price action comes to this exact mark here. This wick of this candle and this wick of this candle are both at the exact same point. Now, it is important to know that when you are trading ICT concepts, the higher the time frame it is, then the stronger that the liquidity is. So let's say if you have, see how here on the 5 minute we don't have any equal highs here, none at all. But then if we go to the 1 minute, we have the equal highs there. Now these are still equal highs, they're still valid equal highs, but they're not going to be as strong. Whereas if we had it on the 1 minute and then we look at the 5 minute, and there are also equal highs. If that was the case, then this would be even stronger liquidity, and I would definitely be targeting that. Okay, so and then that is obviously the same with a sell side liquidity. Okay, so that was just a quick recap of what different types of liquidity there is when you're trading. Now, another way that you're going to, let me just explain that more. So with liquidity, let's say if you have a very strong draw of liquidity. So let's say we had a perfect trend line that was running something like this. I know this isn't perfect, but just to use it as an example, let's say we had a perfect trend line, or let's say we had a perfect trend line like this. then we had equal highs up here. That would be a very, very strong draw on liquidity, and then I would then know that price would just most likely want to go up here, and I would only take trades in that direction. Now, let's say we did not have any draw on liquidity. Alright, so this price right now, yes, we have this kind of low resistance liquidity, some trend line liquidity, but it's not really that perfect, it's not really that strong, okay? So what would we do? First of all, I would look obviously on the higher time frame, see if we have any idea of the draw on liquidity. And if we're looking at this 4 hour, as you can see, we have this bullish fair value gap. Now, if you don't know what a fair value gap is, all a fair value gap is a 3 candle formation where the first candle and the third candle don't touch or connect or overlap in any way. So as you can see here, we have 1, 2, 3. So there's that third candle there and this first candle there. As you can see, from there to there, the candles do not touch or overlap at all. Therefore, that is just a fair value gap. Okay. Now, what can I do with a fair value gap, and how am I going to use that information to help me know where price action is? Okay, so let's look at today's price action. So this is from, let's just look at it from 8.50 because price action looks quite decent here. As you can see, if we go back in the day before, obviously we know what happens now in hindsight, but if we go back, as you can see, we have this 5-minute fair value gap created. Now, we don't have any draw on liquidity necessarily. So we have a swing high up here. We have a swing low down here, but we don't really have a strong draw of liquidity. So what we can do is use fair value gaps to give us a good idea of where price action might want to go. So we know that this is a bearish fair value gap, yes? So when we are using bearish fair value gaps, if you want to see price go lower, you want to see price come into that fair value gap like this and respect that fair value gap. Now, I know some people do like to go short here. Let's say it could be a 2022 model, or just they like to just short fair value gaps. Me personally, I do not like to short fair value gaps by itself. So I would never just randomly short here because I think price is going to go down. I would wait for confirmation. But nonetheless, as you can see, price action did end up going down, but as well as it going down and taking liquidity, it respected fully this bearish fair value gap here. So price did not disrespect this bearish fair value gap. Now, what I mean by disrespecting and respecting is just all the bodies close inside this 5-minute fair value gap. Okay? So that is why we are going down. If you look at the 4-hour chart right here, do you see how we have this bullish fair value gap here? But the body of this candle has closed below this fair value gap, whereas if we were to keep being bullish here, we would want the price action to stay and respect this bullish fair value gap. So let's jump right back to the 5-minute. So here we have that 5-minute fair value gap. As you can see, we respect the 5-minute bullish fair value gap and we carry on going down. Then what happens? We get another 5-minute fair value gap right here. And what are we doing? We are still just respecting this 5-minute fair value gap, and we are keep pushing down. So you might be saying, all right, this is cool to know what's happening, but how do I know if price action is going to go the opposite way? What happens here? We create another 5-minute bearish fair value gap, okay? But look, instead of price action coming up and tapping the fair value gap, price action comes up, wicks into the fair value gap, so it's being respected here. The next candle wicks into it again, and boom. What happens here? Instead of respecting this 5-minute candle here, we inverse it, so we get a candle close above this fair value gap. Therefore, price action is now most likely going to come up and take some sort of buy-side liquidity. So there we have buy-side liquidity, and boom, what does it do? It takes the liquidity. Now we'll see what happens in this 5-minute. As you can see, we are still respecting this 5-minute fair value gap, so therefore we can't look for any more longs, and then obviously this is live price action right now. Okay, so if we do inverse this 5-minute here, then I'll most likely expect price to come back down. If we respect this bullish fair value gap here, then price will most likely want to go up. Okay, so that is just how you're going to use ICT PD arrays to be able to read price action. Now I have a full course on this, so if you are interested in the course, click the first link in the description, and then I also do have a free Discord which is nearly at 300 members. So yeah, thank you guys for watching.